Hello friends, welcome to Finance MCQ. I am CA Pritam Sangwan and today we will continue our discussion on ratio analysis, which is an important topic from Commerce and Accountancy subject of paper 2, which is a technical syllabus of your SEBI exam.
Friends, this technical syllabus is of 100 marks in phase 1 and it has 2/3 weightage in phase 2 of your SEBI grade A exam. And friends, you can find entire technical syllabus of SEBI grade A exam chapter wise, topic wise on Finance MCQ website in MCQ question format. You can visit the website and practice entire technical syllabus there. I have put the website link in the description box below. So let's begin.
Friends, we have already discussed in our previous videos that there are various types of financial ratios such as liquidity ratio, leverage ratio, activity ratio and profitability ratio. And friends, we have already discussed about liquidity ratio, leverage ratio and activity ratio, and in this video we will talk about profitability ratio. So let's start our discussion. Friends, profitability ratio measures the profitability or operational efficiency of the firms. That is, it tries to identify how much profitability or the operational efficiency a firm is having. And friends, in this management attempt to maximize these ratios to maximize firm's value. That is, if a firm has high profitability ratio, it will ultimately lead to higher firm's value. And friends, this profitability ratio have various categories and it can be bifurcated into profitability ratio related to sales, then related to overall return on investments, then profitability related to analysis from owner's point of view, and profitability ratios related to market valuation or investors. So let's try to understand them one by one in detail. First one is profitability ratios based on sales. So first ratio in that is gross profit ratio. Friends, this ratio measures the percentage of each sales in rupees remaining after payment for the goods sold. That is, how much gross profit we have earned from a sales. And friends, higher gross profit margin indicates sign of good management, that management is doing good work or good job. And how this ratio is calculated? So friends, this ratio is calculated as gross profit upon sales into 100. And the next type of ratio is net profit ratio or net profit margin. Friends, this ratio measures the relationship between net profit and sales of the business. And friends, higher net profit ratio will ensure positive returns of the business. That is, firm is earning positive returns if they are having good net profit ratio. And how this ratio is calculated? So friends, this ratio is calculated as net profit or earnings after tax upon sales into 100, or it can also be calculated as based on pre-tax profit, that is earning before tax upon sales. So in either way this ratio can be calculated. So here try to remember that gross profit ratio we calculate by gross profit upon sales into 100, and net profit ratio is calculated as net profit upon sales into 100. And if they ask you to calculate before tax, then it will be earnings before tax or net profit before tax upon sales. So I hope these two ratios are clear. I don't think so there will be any difficulty to remember these ratios. So now let's move to the next ratio. Now friends, let's talk about operating profit ratio. It is also part of your profitability ratio based on sales. And friends, this ratio measures the percentage of each sales in a rupee that remains after payment of all cost and expenses except for interest and taxes. And friends, operating profit is often referred to as earnings before interest and taxes, or popularly known as EBIT. So do remember this, it is known as earning before interest and tax, EBIT, that is your operating profit. And how this ratio is calculated as? It is calculated as operating profit or EBIT, that is earning before interest and tax upon sales. And friends, how this operating profit is calculated as? It is calculated as sales minus cost of goods sold minus all other expenses other than your interest and taxes, and by this way you will get your operating profit. So I hope this operating profit ratio is also clear to all of you. Now let's move on to the next point. Now friends, let's talk about expense ratios. So based on different concept of expenses, these ratios can be expressed in different variants, such as your cost of goods sold ratios. And how it is calculated? It is calculated as cost of goods sold upon 100. Then we have operating expense ratio. This is calculated as admin expenses plus selling and distribution overhead expenses upon sales into 100. These are basically expenses. Then we have operating ratio. Operating ratio, how we calculated? Cost of goods sold plus operating expenses upon sales into 100. So here just friend remember that it is operating ratio, and in previous ratio we discussed that is operating profit ratio. So don't get confused between these two ratios. These are the totally separate ratios. This is expense ratio, that one was profit ratio. And fourth one is financial expense ratio. And how it is calculated? It is calculated as financial expenses, that is excluding your taxes and extraordinary items, upon sales into 100. So these are not that much important ratio, just for the information purpose I have put here in this video. So just try to know that in expense ratio that there are 4 different types of ratios. So I hope it is clear. Now let's move on to the next point. Now friends, let's talk about profitability ratios based on overall return on investments, and the first one is return on investments. And what it is the percentage of return on funds invested in the business by the owner. And friends, it compares profit, earnings or returns with the investments in the business. So in short, it is like how much we have invested in the business and how much money we get out of that business as a return. That is known as our return on investment. And how this return on investment is calculated? It is calculated as return, that is your net profit or earnings upon sales into 100. So basically whatever the net profit we'll get from the sales, that is our return. Return belongs to the owners or to the investors. And the second one is return on capital employed. Friends, it is another variation of return on investment. It compares profit, earnings, return with the capital employed in the business. Above we just talk about returns of funds invested by the owners. So owners investments is limited to equity share or preference shares or reserves and surplus. But here the capital, we are talking about the return generated from with the help of capital employed. So capital employed will also include your outside liabilities like the loans or debentures, etc. So how much overall return you have generated from your capital employed. And how it is calculated? It can be either calculated based on pre-tax basis, and it will be calculated as EBIT, that is earning before interest and tax upon sales into 100, or it can be calculated post-tax basis, that is EBIT, earning before interest and tax, bracket 1 minus T. Here T is tax rate and divided by sales into 100. So what does this EBIT bracket 1 minus T indicates? It indicates profit after tax, net of tax. So I hope this ROC formula is clear to all of you. So friends, try to remember both ratios. These are the important one, and we are not discussing all other type of ratios which may not be relevant here. So just we stick to these two ratios. So I hope it is clear. Now let's move on to a next ratio. Now friends, let's talk about profitability ratio for analysis from owner's point of view. And friends, in that first one is earning per share. Friends, profitability of the firm from ordinary shareholders point of view can be measured from EPS, that is earning per share. If you ask from an ordinary shareholder's point of view how much he is earning from a company or his investments, he can tell that from his earning per share. And how it is calculated? It is calculated as net profit available to equity shareholders upon number of outstanding equity shares. Here friends, what is this net profit available to equity shareholders? So friends, remember that once you get the net profit from your sales minus all expenses, payment of interest, taxes, etc., after that, if you have some preference dividend, also reduce from your net profit, and after that whatever amount you get will be your net profit purely available to equity shareholders, and that we divided by number of outstanding equity shares. So by doing that we will get earning per share. So I hope it is clear. The second one is dividend per share. Friends, it indicates amount of profit distributed to equity shareholders. From the net profit available to equity shareholders, how much amount is distributed to these equity shareholders as a dividend. This ratio helps to identify this dividend per share. And how it is calculated? It is calculated as total dividend paid to equity shareholders upon number of outstanding shares. So I hope this dividend per share is also clear. Then we have dividend payout ratio, that is DP ratio. Friends, it indicates how much profit is distributed and how much is retained in the business. Like in the first ratio we have net profit available to equity shareholders. Now friends, this net profit available to equity shareholders, how much is distributed to shareholders and how much is retained in the business, this ratio, this DP ratio help us to find out that. And how it is calculated? It is calculated as dividend per share upon earning per share. So by this formula we will calculate DP ratio. So I hope this profitability ratio for analysis from owner's point of view is clear to all of you. Now let's move further. Friends, now let's discuss profitability ratio related to market valuation or investors point of view. The first one is price earning ratio. Friends, it indicates expectation equity investors have about earnings of the firm. And friends, it also indicates payback period of investors or prospective investors, that is how much time it will take so that they will get their return on the investments. And how it is calculated? It is calculated as market price per share upon earning per share. And friends, the next one is market value or book value per share, that is MVBV, and it indicates market response of the shareholders investments, that is how market will respond to shareholders investment, and it is calculated as market value per share upon book value per share. Friends, this second one, market value book value per share ratio, is not that much important, so just try to know the significance of it. Even if you don't know the formula, that will be okay. So I hope this profitability ratio related to market valuation or investor is, from investors point of view, is clear to all of you. Now let's move further. Friends, now just quickly talk about which are the important ratios that you need to remember from this today's video. The first one is your operating profit ratio. You need to know the significance, relevance of this ratio. Then we have return on capital employed, again very important to know. Then EPS and DPS, how you calculate earning per share and dividend per share. Then dividend payout ratio, that is your DP ratio. Then PE ratio, again an important ratio to remember. So friends, from out of today's video, try to remember these 5 ratios. These are the very important one and can be asked in your exam. So friends, with this we have covered the entire ratio analysis topic. I request you all to watch this ratio analysis video couple of times to familiar with all these ratios and try to understand their significance, and that can be asked in your SEBI grade A exam. Friends, for more practice of this topic in MCQ format, I request you to please visit Finance MCQ website. It has entire SEBI grade A technical syllabus, which is paper 2 of journal stream in MCQ format. It has 2000 plus subject wise, topic wise MCQ questions to practice. We have added explanations for correct answers wherever required. It also has 25 test series for your technical syllabus to practice.
So friends, there is lot of study materials to practice on finance MCQ. Do visit the website for more practice and increase your selection chances. Friends, website link is in the description box below. I will come up with new video. Till then, take care and thank you so much for watching.